Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025-2026 is a golden opportunity, and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025-2026 a reality. Welcome to part 46 of my Part to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers to help you climb the career ladder faster. Subject for today is Bank of India's miscellaneous MCQs from Advance. The first question is, according to the guidelines, under what condition should the waiver of insurance normally be considered? Option A, if the borrower has a good credit history. Option B, if the nature of the security hypothecated to the bank is not hazardous. Option C, if the insurance premium is too high. Option D, if the borrower agrees to a higher interest rate. And the correct answer is option B, if the nature of the security hypothecated to the bank is non-hazardous. Next question is, what is another term for accounts receivable as mentioned in the document? Option A, supply bills. Option B, book debts. Option C, hypothecation notes. Option D, current assets. The correct answer is option B, book debts. The next question is, what is the maximum age of book debts against which the bank usually does not advance, barring exceptional cases? Option A, 1 month. Option B, 3 months. Option C, 6 months. Option D, 12 months. And the correct answer is option B, 3 months. The next question is, in exceptional cases, advances may be granted against book debts up to how many months old? Option A, 3 months. Option B, 6 months. Option C, 9 months. Option D, 12 months. And the correct answer is option B, 6 months. The next question is, what must be obtained from the borrower when waiver of insurance is considered? Option A higher margin. Option B, a letter of undertaking to replace the stock or equipment in case of loss. Option C, a personal guarantee from the director. Option D, an additional collateral security. The correct answer is option B, a letter of undertaking to replace the stock or equipment in case of loss. Next question is, the agreement of hypothecation of book debts should be stamped as what? Option A, only as an agreement. Option B, only as a power of attorney. D, attorney. Option C, as an agreement and a power of attorney. Option D, as a promissory note. And the correct answer is option C, as an agreement and the power of attorney. The next question is, what is the key precaution against double financing? Option A, increasing the interest rate. Option B, ensuring the borrower does not avail credit from multiple sources for the same transaction. Option C, requiring a cosigner. Option D, limiting the loan amount. And the correct answer is option B, ensuring the borrower does not avail credit from multiple sources for the same transaction. The next question is, advances against supply bills on government departments are classified as option B, A, fully secured, option B, partly secured or unsecured, option C, non-recourse, option D, callable advances. The correct answer is option B, partly secured or unsecured. The next question is, what must be affixed on all copies of a supply bill sent to a government department? Option A, the borrower's signature. Option B, the bank's rubber stamp indicating its lien. Option C, an insurance certificate. Or option D, a notary sign. And the correct answer is option B, the bank's rubber stamp indicating its lien. The next question is, a warehouse receipt is a document of title to goods issued by option A, the borrower, option B, the Reserve Bank of India, option C, Government Warehousing Corporations, or option D, the Chamber of Commerce. The correct answer is option C, Government Warehousing Corporations. The next question is, what is the key risk associated with the clause on a warehouse receipt that allows for the issuance of a duplicate? Option A, the goods may perish. Option B, a dishonest borrower could pledge the original and duplicate to different bags. Option C, the warehouse may charge extra fees. Option D, the insurance may become void. The correct answer is option B, a dishonest borrower could pledge the original and duplicate to different banks. The next question is the warehouse lien for charges has priority over option A, the borrower's other creditors, option B, the bank's dues, option C, the government's taxes, option D, the insurance company's claims. And the correct answer is option B, the bank's dues. Next question is what is the current minimum margin required for an advance against the bank's own term deposits? Option A 5%, option B 10%, option C 15%, or option D 25%. The correct answer is option C 15%. The next question is an advance against a term deposit standing in the name of a minor can be sanctioned to option A, the minor upon attaining majority. Option B, the natural guardian for the benefit of the minor. Option C, any family member. Option D, not permitted under any circumstance. The correct answer is option B, the natural guardian of the benefit of the for the benefit of the minor. The next question is if an advance is granted to a partner individually against a term deposit in the name of a partnership firm, it is classified as an advance against option A borrower's own deposit, option B third party deposit, option C collateral security, or option D unsecured loan. The correct answer is option B third party deposit. The next question is what document is crucial for the bank to be able to set off the term deposit against the advance? Option A demand promissory note, option B letter of set off and appropriation, option C board resolution, option D insurance policy. The correct answer is option B letter of set off and appropriation. The next question is advances against life insurance policies should generally not be granted if the policy is less than how many years old? Option A 1 year, option B 3 years, option C 5 years, option D 7 years. The correct answer is option B 3 years. The next question is for a life policy to be accepted as security, what must be done before the advance is disbursed? Option A the policy must be surrendered. Option B the policy must be assigned in favor of the bank. Option C the premium must be paid for the entire policy term. Option D the nominee must be changed to the bank. The correct answer is option B the policy must be assigned in favor of the bank. The next question is which of the following is a type of policy that cannot be assigned? Option A a single premium policy, option B a keyman insurance policy, option C a policy issued under the Married Women's Property Act 1874, option D a policy from a private insurance company. The correct answer is option C a policy issued under the Married Women's Property Act 1874. The next question is what is the maximum loan amount permitted against shares in physical form for an individual borrower? Option A rupees 5 lakhs, option B rupees 10 lakhs, option C rupees 20 lakhs, option D rupees 50 lakhs. The correct answer is option B rupees 10 lakhs. The next question is what is the maximum loan amount permitted against shares in demat form for an individual borrower? Option A rupees 10 lakhs, option B rupees 20 lakhs, option C rupees 25 lakhs, option D rupees 50 lakhs. The correct answer is option B rupees 20 lakhs. The next question is what is the uniform margin requirement for advances against shares financing of IPOs? Option A 25%, option B 40%, option C 50%, option D 60%. The correct answer is option C 50%. The next question is under section 19(2) of the Banking Regulation Act 1949, a bank's holding of shares in any one company cannot exceed what percentage of that bank company's paid up capital or the bank's own paid up capital and reserves? Option A 10%, option B 20%, option C 30%, or option D 40%. And the correct answer is option C 30%. The next question is for advances against shares over rupees 10 lakhs, what is the mandatory requirement? Option A shares must be in physical form. Option B shares shall be transferred to the bank's name. Option C the borrower must be a share broker. Option D the advance must be for a term of over 5 years. The correct answer is option B shares shall be transferred to the bank's name. Next question is What should a branch do if a borrower desires an advance against shares of a private limited company? Option A, always decline the request. Option B, obtain a board resolution from the company undertaking to transfer the shares. Option C, only accept shares that are fully paid. Option D, require a government guarantee. The correct answer is option B, obtain a board resolution from the company undertaking to transfer the shares. The next question is branches should generally not grant advances against option A blue chip shares, option B partly paid shares, except to share brokers, option C government securities, option D demat shares. The correct answer is option B partly paid shares except to share brokers. The next question is in the demat system for the creation of a pledge, it is essential that option A the shares are first converted to physical form. Option B both the pledger and pledgee have accounts with the same depository. Option C the pledgee must have a higher net worth than the pledger. Option D the shares must be listed on a foreign exchange. And the correct answer is option B both the pledger and pledgee have accounts with the same depository. The next question is what is the primary purpose of inspecting a bank's book debt? Option A to calculate tax liability, option B to verify the statements with the borrower's books and ensure genuineness, option C to help the borrower with debt collection, option D to assess the borrower's fixed assets. The correct answer is option B to verify the statements and the borrower's books and ensure genuineness. The next question is when granting an advance against a supply bill, what should be registered with the concerned government department? Option A, the borrower's company registration certificate. Option B, an irrevocable power of attorney authorizing the bank to realize the bills. Option C, the bank's lending policy. Or option D, the inspection note from the supplier. And the correct answer is option B, an irrevocable power of attorney authorizing the bank to realize the bills. The next question is the aggregate capital market exposure, both fund and non-fund based of a bank should not exceed what percentage of the bank's net worth? Option A 20%, option B 30%, option C 40%, or option D 50%. The correct answer is option C 40%. The next question is which of this is a component of capital market exposure? CME as per RBI. Option A banks investments in certificates of deposits, CDs of other bank. Option B advances against collateral security of shares where primary security does not fully cover the advance. Option C non convertible debentures. Option D preference shares. The correct answer is option B advances against collateral security of shares where primary security does not fully cover the advance. The next question is what precaution must be taken when shares are held in the bank's name but the bank has no beneficial interest? Option A the shares must be sold immediately. Option B a declaration again under the Companies Act must be filed. Option C the borrower must be asked to take them back. Option D the bank must exercise voting rights. The correct answer is option B a declaration under the Companies Act must be filed. The next question is what must be obtained from the borrower when blank transfer deeds for shares are signed by a constituent attorney? Option A, a copy of the power of attorney registered with the bank. Option B, a personal guarantee from the attorney. Option C, a court order. Option D, an indemnity bond. The correct answer is option A, a copy of the power of attorney registered with the bank. The next question is when a life insurance policy is assigned to the bank, what must be obtained from the insurance company? Option A, a copy of the original proposal form. Option B, written acknowledgement of the notice of assignment. Option C, the surrender value statement. Option D, the medical reports of the life assured. The correct answer is option B, written acknowledgement of the notice of assignment. The next question is what action should the bank take if an advance against the life policy goes out of order? Option A immediately reassign the policy to the borrower. Option B send a registered AD notice and may proceed to surrender the policy. Option C write off the loan. Option D increase the interest rate. The correct answer is option B send a registered AD notice and may proceed to surrender the policy. The next question is the breakup value of a share of a private limited company is calculated to assess option A its market price, option B its intrinsic asset value, option C its dividend yield, option D its price to earnings ratio. The correct answer is option B, its intrinsic net asset value. The next question is the usance period of bills obtained for collection against book debts should not exceed option A, the normal credit period or the maximum age of book debts permitted under sanction, option B, 30 days under any circumstance, option C, 1 year, option D, the financial year end. The correct answer is option A, the normal credit period or the maximum age of book debts permitted under sanction. The next question is to avoid undue concentration in an advance against book debts. What is advisable? Option A, increase the interest rate. Option B, fix sublimits for individual debtors. Option C, require all debts to be insured. Option D, convert the facility into a term loan. The correct answer is option B, fix sublimits for individual debtors. The next question is what is the key danger signal inspectors look for in book debts? Option A, an increase in sales. Option B, an increase in book debts accumulating beyond 6 months. Option C, all decreasing the number of debtors. Option D, all debtors are from the same industry. The correct answer is option B, an increase in book debts accumulating beyond 6 months. The next question is what is the stipulated minimum cash margin for guarantees issued for capital market operations? Option A 10%, option B 25%, option C 40%, option D 50%. The correct answer is option B 25%. The next question is advances against shares to sub-brokers should be treated on par with advances to option A stockbrokers, option B companies, option C individuals, option D market makers. And the correct answer is option C individuals. The next question is what must be done with dividends on shares that are lodged as security for an advance? Option A, they must be collected by the bank. Option B, they are always paid directly to the borrowers. Option C, they must be used to reduce the loan principal immediately. Option D, they are irrelevant to the bank. The correct answer is option A, they must be collected by the bank. The next question is when the bank ceases to have an interest in warehouse receipts, what should the branch do? Option A, destroy the receipts. Option B, advise the warehouse man to remove the bank's charges from its book. Option C, return the receipts to the borrower without any intimation. Option D, charge a fee for releasing the lien. The correct answer is option B, advise the warehouse man to remove the bank's charge from its book. Thank you very much for your patience. Please do like, share, and subscribe to this YouTube channel.